Is it visible? Are the slides visible?
Yes, sir. Yes, sir.
Okay. So this course on FinTech, and it is a combination of two words, finance and technology. So today we shall be just learning a few things about FinTech and how basically the focus will be in understanding how technology is changing the entire domain of finance, or it is influencing the entire domain of finance. So that we shall be talking, and we shall be just trying to give a brief understanding of the interplay of technology and finance. What earlier used to be a financial decision or financing decision absolutely taken by some human brain, and now how technology is influencing and helping finance professionals, not only finance professionals but also the users of financial product in taking their decisions or shaping the behavior or influencing their behavior. So before going to this discipline called FinTech, let us understand about the whole evolution of this FinTech, how the FinTech has evolved. So the journey started from 1838 when Samuel Morse, and you must have heard about the name of Samuel Morse, who is accredited with the discovery or invention of telegraph. So when he has invented this Morse code, which is used for sending telegraphic messages, when this internet and this mobile it was not there, then prior to that, the fastest means of sending messages was the telegraph. So and that was used using the Morse code. So the journey started in the year 1838 when Samuel Morse has invented this Morse code and invented telegraphic system for sending messages. And initially, along with the sending messages, if some monetary transaction has to be done, then that was also used to be done using this telegraph. And in those people who are little familiar with the banking system, uh, just prior to 1999 or prior to 2000, there was a term called telegraphic transfer, TT, that from one center to another center, from one place to another place, if someone have to transfer money, then core banking was not available, computers were not available, so the fastest means of transferring money was telegraphic transfer. So and so you can understand the intensity or the importance of this invention, that 1838 to almost 2000, it is 162 years this Morse code was used for sending money, for transferring money from one branch of bank to the another branch or anywhere in the world. And then in 1866, the first transatlantic cable was successfully laid, providing infrastructure for the financial globalization. So this cable was especially for financial purpose. So this was, as it has said, that it has laid down the infrastructure for the financial globalization in the year 1866. So 1838, that Morse code was a general purpose. It was for sending messages, and it was also used for sending money, but this was especially for the financial purpose. Then let us fast forward the things and directly come to the 1950. So in 1950, the first general purpose credit card was invented by McNamara. This was an organization, a diners club. So first credit card was invented, and then in 1967, on 27th of June 1967, Barclays, they have introduced their first ATM machine. So the first ATM machine was introduced in the year 1967 by the Barclays Bank. And then in 1971, the year of Indo-Pakistan War, NASDAQ, which is the National Association of Security Dealers, automated quotations. So NASDAQ is actually one of the stock exchange, over-the-counter stock exchange in USA. So there are certain stock exchanges in USA, like this one OTC is NASDAQ, then New York Stock Exchange is there. So NASDAQ is one of the index of this OTC of USA. Like in India we have Sensex. Sensex is the index of Bombay Stock Exchange. Then Nifty is of National Stock Exchange. Then Nasdaq is also one of the index, and it was introduced in the year 1971. That is National Association of Securities Dealers Automated Quotations, and it has invented electronic trading of securities and IPO, giving growth companies the opportunity to raise capital from the public market. So in 1971, first time this automatic or electronic trading of securities was invented in the Nasdaq. Remember, it is Nasdaq, not in New York Stock Exchange, NYSE. It was not in that. And one of the index of NYSE is Dow Jones. You must have heard in newspapers or in the news channels, Dow Jones, Dow is up or Dow is down. So Dow is that an index of, that is NYSE. But NYSE have not introduced. It is the Nasdaq. It's a relatively small stock exchange than NYSE. And then in 1981, those who are working in the area of finance and in business informatics, and just now we were talking about this getting data. So one of the very strong database was of the Bloomberg. So in the year 1981, Michael Bloomberg, he has created innovative market solutions to provide real-time market data and financial calculations and other financial analytics to Wall Street firms. And the company was renamed as the Bloomberg LP. LP stands for Limited Liability Partnership. The liability of the partner, basically this will be a partnership firm where the liability of the partners will be limited. Normally in any business, especially the sole trading concern, sole proprietorship and the partnership, the liability of the owner or the partner is unlimited. Unlimited in the sense that for paying the business related debts, their personal property can also be attached. But here the liability is limited only to the extent of capital they have contributed in the business. Their personal property will not be attached, and that's why it is called LP. And this is the reason with most of the companies you will find the word limited, like Reliance Industries Limited, Tata Industries Limited, Microsoft Limited, Infosys Limited. The word limited, it signifies that the liability of the owners or the members is limited only to the extent they have agreed, the capital they have agreed to contribute. Their personal property will not be attached. That's just a brief explanation of that. So in 1981, this Bloomberg, one company which is providing the data, especially the financial data, is to the users, that was created. And then in 1982, William Porter created Trade Plus, which kick-started the online brokerage investment revolution and quickly started driving down the cost of online trading. So online broking firm was actually started in the year 1982. And in the year 2009, the Bitcoin was introduced, on the cryptocurrency, which has created revolution. And now we shall be discussing in the later slides how Bitcoin and the cryptocurrency is now changing or is going to change the entire domain of economics and finance. And then in the year 2013, the first mobile wallet or the Google wallet was introduced. Google have introduced Google Wallet, and the Apple have also introduced Apple Pay in the year 2014. And after that, the rest is history from 2013-14, and we are in the 2021. Every day we are finding some new addition to the mobile wallet, or new kind of payment system is being introduced, new addition to the cryptocurrency, and all these things are happening. So basically this is just in brief the history of FinTech, or the evolution, how the FinTech have evolved over a period of more than 160 years. Now, when we are talking about FinTech, so as I told you that this consists of the two words, finance plus technology. So if we have to understand FinTech, so because I have been given the impression that this is a group of technocrats, so let me very briefly explain what exactly is the finance. Because a layman understand finance means only money, but we have to understand just a little more than that, what exactly finance is. So there are two definitions of finance, or especially this financial management. One definition, it concerns only with the sourcing of money, sourcing of fund. And that is actually the classical definition of finance. when 150 years and 200 years back, with the experts in the finance, they have defined finance as a discipline, finance or financial management as discipline which is actually concerned with finding the sources of finance or sourcing of funds. And if you just try to find out what was the reason of this kind of definition, then you will find that at that time the financial market was not so developed. The stock market, the banking system, the financial institutions, they were not so developed. So at that time you will find people bubbling with some very innovative ideas, bubbling with some very business related ideas, but they are finding it very difficult to arrange money, and that's why they are in search of money. So whenever they will find some investors, their business, they are able to start their business. So at that time, I'm talking about 150 years back. So, and prior to that, so the sourcing of money or sourcing of fund was the prime focus of the people who are actually entrusted with the job of managing finance. So that was, but what actually happened, the world has changed after that, and the financial market, the financial institutions, capital market, commercial banks, they have evolved over a period of time, and people have started realizing that it's not the sourcing of fund, but it's application of fund that makes the difference in the success and failure of a business. Because if you have a business idea, the market is so well developed that you will get money. That sourcing of money is not that problem, but how to utilize that money, that becomes the prime concern of the experts or the professionals who are engaged in the business of financial management. So later on, the focus shifted from the sourcing of funds to the application of funds. So today, when we are talking about financial management, basically we mean these two things. Sourcing of fund, still we have the finance manager have to find the ways of getting the most effective and efficient sources of fund, and how those funds can be utilized to their optimum use, that is application of funds. So these are the two prime focus of finance, and a finance manager have to take these 4 decisions in his entire career, and frequently he has to or she has to take this kind of decision. That is called finance function. One is the finance function, that is sourcing of funds. Second is the investing function. Once we have acquired the funds, then where those funds will be invested. And remember, my friends, investing, there are some people who have some misconception that investment means investment in the stock market or the bank or the stocks and debenture. No, investment may be in the real estate, investment in creating assets for the business. Suppose if you have started one computer software company, then your investment will be in purchasing computers. You might be purchasing some patent, you might be purchasing some technical know-how, some software, some applications. So this will be your investment. If suppose someone have started, like Reliance is now going to start one new operation in UAE, in United Arab Emirates, that is, it will be going to have its drilling operations. So what it will be investing? So it will be buying some machines, some plants, some rigs, which will be used for drilling to extract oil from the earth. So that will be the investment. So financing function, investing function. Investing, that for your business, for creating assets for your business, that is investing function. And then the outcome of financing and investing is the profit, and how the profit will be distributed to the shareholders will be called dividend. Remember, dividend is not always to be paid to the shareholders, not the right of the shareholder. And if there is a profit, company management think of declaring dividend, paying dividend. It may think of otherwise also. And the 4th function, which is recently added to the finance function, is the working capital function. That is related to the day-to-day management of the firm. And then the technology. We have understand finance, then the second is the technology. You know what technology is, just I'm trying to read it. Technology is the sum of techniques, skills, methods and processes used in the production of goods or services, or in the accomplishment of objectives such as scientific invention, a scientific investigation. So that is technology. And this example normally I used to give to my BTech students, that they are pursuing their Bachelor of Technology, and they say that this technology is fully a domain from the science and technology. But if you just go to the etymology of technology, so the word technique, the technology has been derived from the word technique, which is a Greek word, and it means science of craft. So technology itself is a science of craft, which is an art. Nowadays the crafting is considered to be an art. So technology, its basic meaning is it has been derived from the word technique, which means science of craft that is related to art. So my dear students, my dear friends, this art or technology or science, this is the compartmentalization people have made just to restrict themselves from learning more. There is no, when ultimately बहती नदियां मिलके सागर में मिले सब, when after a certain times all the disciplines they merges into one discipline, and that compartments, the barriers or the walls, they just vanishes over once you just grow beyond a certain level in your discipline. So the physics, chemistry, biology, mathematics, or management, or accounting, or languages, all the disciplines will merge, will confluence at a particular place, and if you have to take decision, and that's why if you have to take decision as a CEO of a company, so CEO cannot restrict himself that this is not my discipline, I do not understand physics, and that's why I will not be taking this decision, or I do not understand technology, I do not understand computer, and that's why I will not take any decision. That will not do. So that is about the technology or the etymology. And then after this technology, there are some disruptive technology which has disrupted the normal flow of the circular flow of motion or circular flow of the things, that the way they were happening in the world. So the entire circular flow of the economy have been disrupted because of these things, and they have been considered as the disruptive technology. So these are some of the disruptive technology which we, like Apple or Tesla, Amazon or Facebook or Uber or Netflix or Amazon, these are some of the disruptive technology. And this disruption is not only in the general domain, but it is also affecting the domain like finance, and how this technology, or especially this disruptive technology, is affecting finance, we shall be understanding today. Then effects of technology and business, a lot of discussion might have been taken, so I'm not going to just deal with that. So that effect of technology is real-time data analytics, artificial intelligence, robotics, and smartphones, and startup businesses. So these are the things which has been discussed. And what is driving innovation in financial markets? So definitely low barriers to entry, affordable infrastructure, new currencies, credit system affecting incoming banking and investment, changing consumer behavior and expectations. So these are some of the things and which are actually disrupting. And financial technology. So now finance and technology we have understood. Now what FinTech is? So FinTech is also known as the economic industry composed of companies that use technology to make financial services more efficient. So we have understood finance, and we have discussed about technology. Now FinTech is, once again, also known as FinTech, is an economic industry. FinTech is an economic industry. Remember the word economic industry. FinTech itself is emerging as an industry composed of companies that use technology to make financial services more efficient. That is the definition taken from the Investopedia. Now, having understood this technology and finance, now let us briefly understand, just for example, what are the areas where technology is actually influencing in finance. So the use of technology in finance. So let us start with accounting. Traditional way of doing accounting is that the accountant, that is on pen, with using pen and paper, that accounting was done. In most of the movies you must have seen one Lalaji having his red Bahi Khata, is maintaining all his accounts. That was the traditional way of doing account. And if someone asks what exactly is accounting, so you must understand what is the definition of accounting. So accounting is the recording, classifying, summarizing and analyzing, and then reporting of financial transactions. So whatever the transactions are happening in any business, that transaction, first it has to be recorded. And remember, we are talking about financial transaction. So any transaction which is not within the purview of finance, where the money is not involved, that will not be falling within the purview of accounting. So accounting is that even if, whenever there is some transaction, a small transaction or big transaction, that transaction has to be recorded. And the second, those transactions has to be classified. Like one type of transaction has to be recorded at one place, another type of transaction has to be recorded at another place. Let me be more elaborative in this. Like all the transactions related to purchase will be placed in purchase ledger. All the transactions related to sales will be placed in sales ledger. All the transactions involving cash will be recorded in cash book. All the transactions related to one particular party, maybe some vendor or some supplier or some customer, will be recorded in the books meant for that particular purpose. Like all the transactions related to Mr. X will be recorded in the account that is called Mr. X account. So that is called classification, and once this classification is done, then all the transactions are summarized. After summarizing, this analysis is done, and then finally the end product of accounting is it has to be reported to the users of accounting information. Remember, I am using the term users. I have not used the term the owners. Why? Because now when the context that we are using today, that this entire accounting operations, that is a corporate form of organization. And in any company, who are the stakeholders? It's not only the shareholders who will be requiring accounting information. It might be the government, it might be the taxation authorities, it might be the creditors, it might be the bank, and this the accounting information that has to be published in its annual report, so that becomes in the public information, and that used to be in the public domain, and it is now mandatory for the companies to upload their accounting information on their website. That is their end product of accounting, and the end product of accounting is profit and loss account and balance sheet, and sometimes it's cash flow statement. So this is how this process has started. So the entire process, it was used to be done manually earlier, and now with the advent of computer, it is now done using some softwares. Tally is one very popular software which is doing all these transactions. So entire process of recording, classifying, summarizing, analyzing, and then reporting to the end users, and everything is done by the Tally just with the click of one mouse. So this is how the entire process of accounting, which is very cumbersome, very boring, that has been expedited using some applications, Tally. And now the further development in this area is that so far as this accounting reporting practices, that is also being computerized. IPO, we have heard about IPO, that is initial public offer. Whenever a company, it wants to go public, it wants to become a public limited company, then it has to go for issue of initial public offer. That is, it is going to issue its shares, offer its shares to the general public. Then this management of IPO happens to be very complicated and very cumbersome, very time-taking work. And whenever this IPO was launched by any company, normally these IPOs, they used to be oversubscribed, and sometimes they are oversubscribed to the tune of 100 times. Like one IPO of say 10,000 crore rupees have been launched, and the number of applications received against that IPO, that particular offering, is not only for the 10,000 crores of rupees, but it is 100 times more. And now it was a very difficult task for the managers who are managing that IPO. And one thing that one very specialized agency is entrusted with the job of managing IPO, and they are known as the merchant bankers. Remember this term, merchant bankers. So this merchant bankers, they are not like commercial banker like State Bank of India or ICICI Bank or SDFC Bank. They are merchant bankers whose job is to manage this IPO. Or to be very precise, or to be just put it in a different words, if any company is willing to go for its public issue of shares, so it is not the job of the company to go to manage IPO, because the company have not gone for issue of IPO in its past. It's not the job, and any company will be going for issue of initial public offer maybe only once or twice in its lifetime. Reliance have gone for issue of IPO in 80s, that is only once, and after that they have gone for some right issue one or two times. So in that way only. Tata Steel, 120 years old company, have issued IPO only once, and 2-3 times they have gone for the right issue, and one time follow on public offer. So in its life, in the entire year of 120 years, they have gone for issue of shares only 2 to 3 times. So they may not be specialized in this job, because this requires technical expertise, this requires legal expertise, this also requires financial expertise. So there are certain firms known as the merchant bankers who are actually specialized in the entire job of managing IPO. And earlier the entire thing used to be done through just manually only, but now this entire thing is this artificial intelligence based, and online applications are invited. And one terminology you must have heard, ASBA, application supported by block amount, that is this IPO application is submitted online only. You need not to pay check, you need not to pay draft. As online applications will be there, using artificial intelligence the allotment will be made. So those shareholders to whom allotment will be made, letter of thanks will be sent to them, that, and those shareholders, like if in this case in our example, which is oversubscribed to the tune of 100 times, so only 1% of the applicants will be receiving letter of thanks, and remaining 99% of the applications, they will be sent letter of regret. That will also be done by the online system, online only, using certain algorithms. Then trading, that is also used to be done online. If you have seen the movie, one web series is there, Scam 1992, and you will find that during those days in the year 80s and early part of 90s, this outcry system was there. If suppose someone have to buy shares, so they have to go to the market, they have to keep on crying, and ultimately at the end of the day they will be just matching their orders, how much orders they have received and how much stocks they have sold. So that outcry system was there, and now this entire process is online, and artificial intelligence is also being used in that. Then banking is also becoming online banking or computerized banking, and Finacle is one software which most of the banks are using. That is one software by Infosys. Other softwares are also there. I have just given one example of Finacle. Investing is also becoming online or artificial intelligence based. So when we have to talk about the scope of FinTech, so right from the payment to the insurance, deposits and lending, capital raising, then investment management and market provisioning, everywhere this FinTech is, or technology is playing role. So let us discuss about this payment. So earlier, as I told you at the very beginning, that telegraphic transfer was the only way of transferring money from one place to another till the year almost 1999-2000. After that, this revolution came in the area of payment or the money transfer, and nowadays the entire transaction or entire world is becoming cashless. Actually, I have a reservation with the word cashless. The world will never, I'm talking about this world, cashless world. The world will never be cashless world. Rather, the correct terminology would have been less cash world, less cash, not cashless. Even if there are 2% or 1% of the transactions are happening in cash, then still it is not cashless. Cash is there. But what the correct terminology should have been, less cash. Cash is minimized, less cash world. So that the world is becoming less cash world. So just now Professor Vyas sir was explaining this integrated billing. So now integrated billing and the mobile payment and this cryptocurrency and the lot of emerging payment banks are also emerging, mobile money is there, cryptocurrency is there. So all these things have just made a revolution in the area of payment, and the whole thing has been very expedited, and the process is very fast. I remember a few years back I used to teach my students how to expedite cash collection. And why actually we have to teach, especially in the working capital management, how to expedite cash collection? Just to understand the problem. What was the problem? We have a business here, the head office is in Allahabad, and one of our customer, he or she is in Mumbai, and we have sold goods to that customer at his place in Mumbai, and the terms of the payment is that the moment the customer will receive the goods, the customer will have to make payment. Suppose from here Allahabad we have dispatched the goods, it will take some time, some transportation time, say suppose 10 days, and on the 10th day the customer have received the goods, and on the 10th day customer have paid check. The moment customer has issued check and paid to us either by post or either by our representative, the customer's liability is over. We cannot charge customer. But on 10th day, the customer have issued check and he has sent it by post to us. So in post again it will take 10 more days to receive us. And then on the 20th day, we will be submitting our check to our local bank, and our local bank here in Allahabad, they will be sending the check again to that branch in Mumbai for clearing. Again it will take 10 days. So that is on the 30th day, our bank in Allahabad is sending that check to the customer's bank in Mumbai. That will take another 10 days. So 30 days have gone, and it will take another 1 day just to get the local clearing. And then on the 31st day, the Mumbai branch will send another letter to our branch in Allahabad that the check has been cleared. It will take another 7 to 10 days. So the customer who have paid check on the 10th day, the money is actually being received on 41st after 41 days. So there is a lag of payment of 31 days, and we are not receiving anything for 31 days. We have received that check theoretically, but that money is not in our bank account. We cannot use that money, and if that money is not in our bank account, we cannot claim interest also. We cannot charge interest from the customer also, because the customer technically he has paid the check, so he is relieved of his duty. He's not having any obligation till the check is bounced. अगर bounce हो गया तो उसमें फिर और अलग से कहानी होगी. So that was the problem. And then what actually the companies used to do to expedite cash collection, they used to have some lockbox system or their local representative who will be collecting the check, and concentration banking was another term, that in Mumbai office only some, like if suppose I know that I have most of my customers are located near Mumbai, so in Mumbai I will have one more bank account, so I will ask my customer to deposit check in my local office, who will be submitting check in the Mumbai branch on the same day, and then within a few days that check will be cleared and the money will be transferred from the bank to bank, and then the process, the lag will be minimized to some extent. That was actually we were teaching to our students a few years back, but now there is no requirement of that. The moment customer have received the goods, and the payment can be made using online payment mode, maybe online banking or this mobile payment or any other. Now e-rupee is also another invention which has been introduced by the government of India. So that is actually a revolution in the payment mechanism. Insurance, now again insurance is becoming online insurance. So policybazaar.com is very popular. So now you need not to buy insurance using some traditional channels, or like you need not to wait for some insurance agent to come to your place and offer you or explain you some insurance policies. Now online insurance or paying online insurance premium or claim settlement, online claim settlement, all these are becoming a reality. and all these are made possible only because of this fintech technology is available. Then deposits and lending, this alternative lending or shifting customer preferences, virtual technology is there. And in deposits and lending, is post office payment bank or post office bank is also there. That is, you need not to, if you want to open up an account with this post office, you need not to go to the post office. Simply you will have to download one application and your bank account will be open in your mobile only using some verification code. You can open up your bank account. Similarly, like Paytm payment bank or Airtel payment bank, or it is Airtel bank is there. So you can just open your bank account, and this online deposits and lending is also possible. Then raising of capital. So okay, this raising of capital, apart from IPO we have just explained. Now one terminology which is very popular nowadays is the crowdfunding. So my dear friends, crowdfunding is not a very new concept. It was there in old days also, when the musicians or some writers in Europe especially, when they have to get their book published, when they have to get their work published, so and these writers or the musicians, they do not have money to get their work published, so normally they just go for the crowdfunding. They just appeal to the people to donate some money, and ultimately they can raise some money, and this is crowdfunding, and their work used to be published or recorded or whatever it is. So this is not a very new concept, but the entire domain of crowdfunding, it has been revolutionized after this technology is mixed with that. Now making an appeal physically and making an appeal online is very important. It's creating a very significant difference. A few days back, I was just listening to one of the interview of the Nilotpal Mrinal, very popular writer of Hindi, and he said that when his book Dark Horse was complete, and he was just finding some publisher, so he had just given a post on Facebook that I have completed a book, manuscript is ready, and I am in search of publisher, and the publisher have contacted him. So all this was possible. So this is just with respect to the publication of book. So similarly, now the crowdfunding is also used for funding new operations. This venture capital financing is also through this crowdfunding. You just float an idea. There are certain platforms, certain websites where you can just float your idea, and the interested party will contact you, and this crowdfunding is now becoming very more popular only because this crowdfunding, the concept was there, but this technology is also mixed, or it is now used, it is floated using some technological platform, and that's why this crowdfunding is also becoming a reality gradually. And then investment management. We have just discussed that how investment management is becoming very effective and efficient using this technology. So it is entire process is externalized, or investors are actually empowered. Now how investors are empowered? Because investors are now having more access to the information, and just now I was explaining to the sir that nowadays the information or the data is the real asset which will be required for making any decision. So the investors are becoming more empowered because of availability of data, and this data is made available only because of this technology. Just now I have, while explaining accounting, I told that all the companies which are public limited companies, now it is made mandatory for them to upload their annual report into their website, and once this annual report is uploaded on the website, so all those data is available to the investors. Not only to investors, all the stakeholders, whether it is a creditor or it's a customer or the bank or the government, so that data is available. So the investor is becoming more empowered in the entire process, and empowered investor is making more empowered, is capable of making, whether he or she is taking or not, that's a different story, that's a behavioral issue, but the investor is empowered. And then market provisioning. that now the market is becoming more faster, smarter, the machines and the new market platforms are coming, new platforms like Amazon or Flipkart, these new marketplaces are coming. So this fintech is actually have changed the entire entire domain of hemisphere of the finance, whether it's purchase or insurance or banking or capital raising. So just now we have discussed that there are certain functions of finance: investing function, finance function. So finance function is about raising finance, so that has been changed using this fintech. Investment function, that is investment management, is also changed using this fintech or this the market provisioning. Then dividend also we will just learn how dividend function and working capital management. So far as this dividend function is deeply changed because of the change in the payment mechanism. Earlier I used to be, because let me honestly confess that I am an investor since 2006. So in 2006, if the company have declared a dividend, suppose in the month of October, so we used to receive check by the end of November, and then check is deposited again in my bank account, and then check normally used to be cleared again. The process I have explained, it will be sent to the company's bank account, and the entire process of clearing will took time. And the dividend which was declared in the month of October, that used to be credited in the investor's bank account maybe in the month of January, almost there was a time lag of 2 to 3 months. But now if the company have declared dividend today in the month of October, so immediately on the same day or maybe within a week, that money will be credited into the accounts of the investor or the shareholder. So that is how this entire, all the functions, finance function, investment function, dividend function and the working capital function, all the functions have been touched by the technology in the recent times. So this is the fintech universe. Once again, just payment, then digital banking, investment, crowdfunding, P2P lending, blockchain, cryptocurrency, insurance and regulatory aspects are there. So we shall be discussing all these things one by one today. So the key technologies which are actually driving innovations in finance is a distributed ledger, which is actually used in the blockchain, and the cryptocurrency is basically dependent on the distributed ledger technology, DLT. I think you must be very clear about this DLT, because yesterday I have heard the Dr. Venkatesh have explained about this distributed ledger technology. Then data analytics, artificial intelligence, robotics and Internet of Things. So all these things are these 4 or 5 key technologies which are actually driving innovations in finance, and every day we are finding one new addition to the existing product, financial product, and this is because either some technology, some development have taken place either in the DLT or data analytics or artificial intelligence or robotics or Internet of Things, or sometimes Internet of Services also nowadays. So the 4 thematic areas of financial innovation, that is, we have to talk about the future of money, then the future of financial market, and the future of financial marketplace, and the future market infrastructure. These are the 4 thematic areas of financial innovation we shall be discussing. And when we have to discuss about the money, so money is a matter of function for a value, a measure, a transaction and a store. This money normally used to perform these 4 functions. It's a value function, it's measurement function, it's store of value, and the transaction value. So these are the 4 functions money used to perform. So here we shall be discussing about the 2 key functions of money, that is, one is the for value, or second is the store of value. So for that purpose money is used. And now the latest development in the area of money is that earlier we used to have currency notes, and that used to be kept in bank, and if we have to make payment, that note has to be transported, notes has to be transferred from one person to another person. But now the new version of money is the digital money or e-money or mobile money. Most of the time these 3 terms are used interchangeably, but only thing is that in mobile money, when exclusively it is used, transferred using this mobile device, then it becomes mobile money, and digital money is relatively, or e-money is actually a broader term which includes mobile money also. Then the future of money and payment. What will be the future? once again, though we are using, or even our government is also using the term cashless, but I prefer to use the term less cash. Just cash, less को पहले करिए, cash को बाद में करिए, less cash. That is the future of money. The money will become cashless. Then customer interaction, physical interaction with the customer will be minimum. You must have experienced in your day-to-day life also that if you have to make payment, someone is making call and just sending some QR code or phone number, and you are just transferring money just based on that QR code or phone number. So the interaction, physical interaction with the customer is limited. Then the driven by data transparency and the financial data, which will reduce the cost of transaction, and automated and invisible payments will be there. So this will be the future of money and the future of payment. We have just discussed about this money and future. So this is going to be the future. Then payment, exclusively for the payment, we have seen most of us are using this Paytm or Google Pay, or even this Ola Pay prepaid is also there. But as a researcher, this is fine that okay, these payments are there, or this future of payment or future of money will be there. But as a researcher, because most of us are either research scholars or the teachers, so what are the emerging issues, and what are the areas where we can focus, or where we can do some work, some research work, and which has the potential of getting published in some good journals. So one emerging issue is the new regulations. Remember, these regulations are issued by the government once certain developments are taking place in the market, and taking care of all those developments, some regulations are issued. So when there was no mobile money, when there was no digital money, so there was no question of all those regulations. But once this digital technology was introduced, digital money was introduced, then our government have also made some amendment to its existing rules and regulations. And now you must be happy to know that the recent banking regulation, banking regulation, which has been introduced, which has been released by the government, they contain a detailed do's and don'ts about this digital money, or this mobile payment, or especially this payment banks like Paytm payment banks or Airtel payment bank. Like these are payment banks which are exclusively for making payments or facilitating the payment of money or transfer of money from one place to another, from one account to another account. So these new regulations are coming. So new regulations, they are never 100% secure, 100% efficient, 100% effective. So we as a researcher, we have to find out what is the problem with the new regulation and how these new regulations can be made more effective. So for that, we have to do some empirical study, collect some data from the customers, and ultimately we can come up with some finding which will help the policymakers in strengthening all these new regulations and these new laws. Some security issues are also coming up. Every day we are finding some new security issues, some security threats are there in the newspapers. Every day some new security issues are actually being reported, that so and so have lost some money because of so and so reasons. And one reason that people are falling prey to or becoming a victim of all these online frauds or cyber frauds are because they are not aware of. So one project, one research work can be, or some research and development work can be on making the people aware of all these security issues, like they should not share their password or these things. We know it that we are not supposed to share our details with everyone or with any person who is just calling us. But in a country of 135 crores, there are a vast majority of the people who do not aware about all the security issues. So this security is one of the issue, and how to deal with this can be a future research work. To what extent the young generation, the old generation, they are aware of all the security issues. This can be an interesting area of research. Then behavioral intention. All the things are there, but as just now in the previous session, Vyas sir was asking like how the people are coping up, or what are the challenges people are facing in coping up with the new technology. So that is also one issue. What is the behavioral intention to cope up with the new technology? This we have to study. And how the people who are not adaptable to the new technology, so what is the way out? How they, because ultimately we cannot stop this technologization, but somehow those people, they have to either they have to adopt or they have to find some other way out to deal with this technology. So what is that other way out? That we have to find out, and that can be an interesting area of research which can help lots and lots of old people who are not very much adaptable to the new technology. And then switching behavior, because this is an interesting study, that online switching behavior, social site switching behavior, like you must be knowing that the people who are using Facebook or Instagram, at one point of time there was only one platform, that was Orkut, and we all were using that Orkut as one of the social media platform. But now, after arrival of Facebook, people have started leaving Orkut and they have joined Facebook. Then to give competition to Facebook, Google have introduced Google Plus, but that was also not accepted by the users, and now the rest is history. So how these people are switching from one platform to another platform. So this is about the social side. Similarly, from switching behavior from Paytm to mobile wallet, and from so Paytm to PhonePe or PhonePe to Google Pay, that switching. And remember, this switching behavior, it does not involve any cost. Simply you have to download an application, and now I was making payment using Paytm, and from tomorrow I will be just downloading application of PhonePe or Amazon Pay or Google Pay, and I will start making payment using Google Pay. I will be using alternative technology, and there is no barrier also in switching. So we have made one study. An interesting observation is that it's not the switching cost, it's not the feature, it's not the habit of the customer, but it is the alternative attractiveness. This is our study which we have just communicated, that alternative attractiveness is influencing the switching behavior of the people. ओके, सो लाइक जब तक दूसरे का स्पाउस आपको अट्रैक्टिव ना लगे, आप अपनी स्पाउस को नहीं छोड़ेंगे. सो दिस इज सिमिलर टू दैट ओनली, स्विचिंग बिहेवियर. नाउ कम टू द बैंकिंग. द बैंकिंग इज आल्सो नो लॉन्गर like the traditional banks used to be. And one interesting term is that banking is nowadays essential, but the banks are not essential. And this is made possible only because we have developed such a technology. I was just talking about India Post Payment Bank. Here you can just open up your bank account in your mobile without having a physical evidence, physical presence of any bank. So banking is essential, but the banks are not. So this is also another area which has been touched upon by the technology, and the banking is also changed because of this technology. Forget about this online banking or computerized banking or core banking, but here it is the other way around. It is going beyond that. So the traditional banking is now no more traditional. This is actually the latest form of banking, that we are having bank, we are using bank account without the physical presence of bank. But what about the traditional banking? The traditional banking is also no more traditional. So being a student of marketing, I just I cannot stop myself from sharing one very important definition only. Definition of a customer in a bank. Prior to the year 2000, 2004 especially, the definition of a customer of a bank is a person who is having an account with the bank. So any person who is having any account with the bank is a customer of that bank. So if I am just entering into any other bank, but I do not have an account with that bank, I am no more a customer of that bank. I am customer of some other bank where my account is there. But after this core banking technology have been introduced to the bank, and now the definition of customer have been changed. So now the definition of customer of a bank is anyone entering into the banking premises is a customer. Because I may not have bank account with that bank, but I might buy gold, I might buy insurance or mutual funds from that bank, or I might buy some other products from that bank branch. So I am a customer. So that this is how the entire definition of customer conceptually it has been changed. Now, so far as the banking is concerned, what are the areas where the future research can be conducted? So digital banking, digital payment, these are some of the areas where the research from the perspective of management, I'm talking of from the perspective of management or from the perspective of behavioral dimension, you can think of the same thing from the perspective of a technocrat. So like, what are the factors that lead to the adoption of digital banking or digital technology? Just now we have discussed, like some people, they do not adopt. So what are the factors that lead to the adoption or non-adoption? Then what is the level of risk perception? Why do, like, there is always, because I see it, so I believe it. So in case of digital payment, I do not see the physical movement of money, and that's why I do not believe it. So what is the level of risk perception of the people who are actually making payment using digital payment, or like the people who are just new to this digital payment or digital banking? So what is the level of risk perception? Then similarly, different biases are there. There are 149 different types of investment biases. Not all 149 biases are applicable to the digital banking or digital payment, but some of the biases are actually related to this digital banking or digital payment. So how these biases are actually affecting adoption and implementation of digital banking and digital payment, this is an interesting area of research. Then awareness. So far as this security is concerned, here also this awareness is also not about the security, but just awareness about digital payment. Many people do not use because they are not aware of. Then the trust is an important factor. Just now I quoted that I see it, so I believe it. Here in digital payment, digital banking, this mobile payment, e-money, I don't see any physical movement of cash. And that's why the trust and the belief is very important factor. So how to build that trust? That is an important part. Then financial inclusion. Now financial inclusion, those who are not very familiar to this terminology, let me explain that financial inclusion, the government of India is now have taken the objective of inclusive growth. And here financial inclusion is also one such aspect of inclusive growth. Inclusive growth is that anyone should not be left out of the growth trajectory of the country. So financial inclusion is that the people who are financially excluded from the mainstream, like they do not have a bank account, they are not using financial services, they should also be taught, they should also be included into the mainstream, so that they are included. And how? So and one way is that they should be allowed to use financial product, financial services. So once they will be started using the formal financial services, I'm using the term formal because it's not that they are not using finance, they are using financial services, but when they require loan, they used to go to the local Mahajan of their village. They used to go to the indigenous banker, local Kabliwala. So they are using those services. They have to transfer money. They used to just hand over cash or transfer cash using some Hawala transactions. So they are actually not formally included into the mainstream financial system of the country. So this how these people can be financially included? And one reason that they are not financially included is that the reach of our bank branches. There are certain areas in our country, like I'm from the northeastern region, and I have seen it in the places like Nagaland and Mizoram and even Tripura, Meghalaya. There are certain places where the nearest bank branch is maybe 10 to 15 kilometers away. So definitely they will not be going to use banking services. They are not going to walk for 15 kilometers. So can this digital technology be used for this financial inclusion, for bringing more financial inclusion? Because they cannot come, but the network, that mobile network, can go to their place 15 kilometers away, and Using their smartphone, they can download that application, that virtual bank. They can have a virtual bank account, and if once they have a virtual bank account, they will start using those financial services, virtual lending, virtual deposit, using that mobile application, and ultimately they will be financially included into the mainstream financial system. So this is also one very interesting area of research, financial inclusion. And financial inclusion, though this is a subject of sociology, but here these technocrats on the fintech have a huge role to play, and that is why at the beginning I told you that after some time, after some developments, or once you start growing up in a particular field, all the compartments or disciplines, they just vanishes and they merge, all the disciplines, they merge together. So this financial inclusion or inclusive growth is a terminology of sociology or economics, but here technology can play a huge role in bringing financial inclusion. Information security, we have just talked a lot about information security. Cyber laws, some of the cyber laws are there. Do we require some more cyber law? Some more regulations are coming, like Banking Regulation Act, new Banking Regulation Act is coming, which is actually dealing with the cyber laws. Do we require some more cyber law? That we have to invent, or that we have to think of. Cyber crimes are also growing. How to deal with all those cyber crimes, that also it will be the emerging area of research for some of our young researchers. So far the investment is concerned, if you can correlate this scenario, I just told about one popular movie, like on Hotstar, this movie is there, a Big Bull is there, on Sony Live this Scam 92 is there, and if you just see, you will find this kind of scenario in that movie, and you can correlate it that during those days of like 85, 86, prior to that, prior to actually 1996 in India, this outcry system was there. People used to just go and cry for, if you have to buy some security, you have to go and do like this outcry system. And being an Indian, it's a moment of pride for each one of us that India is the first country which has gone for 100% screen-based trading. Not even USA, not even UK or Germany or Italy. It is the India which has gone for the 100% screen-based trading. Even in the year 1996 where we started, and at the beginning of 2000, the new millennium, we have completed 100% digitalization of our investment process. Now we do not have this outcry system, and if you have to make payment either in mobile or you can go to some terminal, you will find this kind of red means the prices are falling down of this particular security. TTPH or these are the name of the companies, so you will find this kind of a screen. So it is 100% screen based. So earlier it was 100% screen based using computer. Now mobile applications are also coming up. You must have seen advertisement in your television or in YouTube channel. This mobile applications are coming, like Grow is one mobile application. Just using that mobile application you can make some investment. So here also what future research can be conducted. Application based trading, and what is the future of application based trading, what is the preferences of the people who are going for the application based trading. So we can just think of in that direction. Some empirical research can be conducted, how to make that application based trading more effective, more efficient. Some behavioral issues in online trading are also coming up. Just now I told that there are 147 behavioral issues, and I was just listening to Professor O.P. Vyas one lecture that because of automation, an inefficient system will become more inefficient. So this in online trading, this is becoming actually kind of automation. So whatever the behavioral biases used to be there in this outcry system or the physical trading, because of automation, all those behavioral biases will become more efficient. Like they will become more prominent. So these behavioral issues, they are actually becoming more challenge. Investment biases, just now we have discussed. So an inefficient system because of automation become more inefficient. So investment bias because of automation will become more prominent. That will be the future direction of research. Now optimization in trading. because of this automation and this high frequency trading, in 1 nanosecond, thousands and millions and billions of transactions that took place. So this optimization of trading is now becoming a core area. This is one area where the technocrats, this technologists, can have a role to play. Then interesting area, astrology and finance. Now everything is becoming digitalized, and there are people who used to wear their lucky shirt on their favorite day or the day when they have to make investment. They will be buying shares only on Monday, they will be selling shares only on Friday, some full moon effect, lunar effect, all these things are there. So that astrology and finance, that is an interesting area, and this is an area, astrology and finance, this is almost uncovered. Any new researcher, young researcher can think of venturing into this area, or at least one project can be written. Now government is also supporting this kind of things. So the future of financial market, once again, this crowdfunding, then social trading platforms, algorithmic or high frequency trading, artificial intelligence and prediction, market and collective intelligence will be there. Mutual fund, this is also becoming automatic, application based. This CAM is actually, this is the name of one application, or FinTech is also now becoming one application. So now you need not to put your signature for redemption or making investment. Just using this application you can make investment in mutual fund. Dividend, earlier, just now I told that earlier we used to receive a dividend like this in check, and now we are not getting dividend in check, rather it is electronically credited in our bank account on a way, after very few days the dividend is declared. Then once, why actually I am quoting this investor education with dividend, because it so happened earlier that the check which was dispatched by the company did not reach the investor because of any reason. Either the investor have changed their place, investor do not reside, or address has been changed, or anything might, or the post was not delivered, maybe deliberately or because of some reason, and then this dividend which was not actually credited into the bank account of the investor, it's not that company will take it back. It used to be credited into one fund called Investor Education and Protection Fund. This one, Investor Education and Protection Fund. So this dividend, which is called unclaimed dividend used to be credited into Investor Education and Protection Fund, and it will be in this fund for 7 years, and within 7 years the investor can go and claim this dividend from this fund, and he will be getting that dividend. But if up to 7 years the investor is not claiming this unclaimed dividend, then it will be used for, it will be forfeited, and it will be used for investor education and protection. So here investor education is very important. Online investor education and counseling is becoming important, and these are some of the emerging research area in this field. Future of marketplace, we have already discussed this. Mobile and the new platforms are coming. The DLT, that is a blockchain, is also changing the future of marketplace. And the financial inclusion, we have already discussed about how financial inclusion can be a reality using this digital technology. Algorithmic trading, a high frequency trading, just you will not be trading, but the computer will be trading on behalf of you. So this is also, our students are doing, technocrats are doing, just you have to write some code that your computer will buy securities once they will reach a certain level, and once they will go up beyond a level, they will be automatically sold by your computer. So this algorithmic trading is becoming a reality. For borrowing, it's not necessarily banks, and banks are actually becoming partner in borrowing. So like you have heard a case of Vijay Mallya. So Vijay Mallya, he has left India with 9,000 crore money, but the entire 9,000 crore was not given by one bank. It was given by a consortium of banks. So actually one bank or the banks are becoming a partner in borrowing. They are just helping you in borrowing money from different places. And all these are made possible because of this technology. Insurance, we have discussed this. Agency model is now becoming outdated. And now people are using insurance, whether it's car insurance or life insurance or health insurance, using this online trading platforms. But so far as this insurance are concerned, there are certain things like adoption of online insurance, just like adoption of digital banking. Adoption of online insurance, it also requires a special focus. Why people is still not buying insurance online? This is a question. And I asked one person, why are you not buying insurance, your health insurance online? He said that I do not buy health insurance online because I do not know to whom to call in case I require any services. Policy related, insurance policy related services, maybe getting some premature benefits, getting surrender value, getting some claim settlement. I do not know whom to call, but I know my agent who is just residing nearby my house, so I can call him anytime and he will be there to help me. Or at least agent is not there, but some other agent, some other family member, some of his friends will be available who can come on my call and they will be helping me. Risk perception is also one aspect. Online corporate buying, like government e-marketplace, GEM. So now, like in our IIIT, we have to go for the insurance of our vehicles. So we cannot go to some of the insurance agent. Now the government e-marketplace, that is GEM, we have to buy insurance from the GEM only. And this corporate insurance buying is also getting changed because of this introduction of GEM. So GEM is also becoming a very interesting area of research that our students can do. Accounting, we have explained. Online taxation, you know it. Then what are the issues and challenges with respect to the account? One important issue with respect to this online accounting or the digital accounting is the digital literacy of accountant. The accountants, they are very good in accounting. They have learned accounting, but they are not, the old accountant I'm talking about, they are not digitally literate. So they know how to understand accounts, but they do not know how to make an entry in computer. So that is one very emerging issue with respect to this online accounting. Then course curriculum of accounting students like chartered accountants, cost and works accountant, company secretaries. This course curriculum, they are very thorough, very deep to make a student very good accountant and very good cost accountant. But this digital literacy, to some extent, it is not. Nowadays the syllabus has been revised and this digital technology, digital curriculum has also been introduced, but to what extent it will become effective, that we have to see, and that may be a future area of research. E-audit and some of the security issues in accounting, security issues in auditing, that is also coming up. When the auditor have went for auditing, the things are presented in some way, and once the auditor has left, the things can be manipulated so that auditor cannot catch it. That is also one of the security issues in auditing which is coming up. And because you have heard about this Satyam Computers, collapse of Satyam Computers, then the bankruptcy of WorldCom or Enron Incorporation. And remember, the auditor of Satyam Computer was the Price Waterhouse, very well-known firm. Auditor of WorldCom was Arthur Andersen and Company. Arthur Andersen, that was a very popular multinational accounting and auditing firm, but they could not identify all those lapses, the frauds which were actually happening in that company. So these are some of the issues which are related to digital accounting. Cryptocurrency is coming up. This will be the future of currency, or what will be there, because a few days back Government of India have put a ban on cryptocurrency. Now the cryptocurrency is not legalized, but that ban has been removed. So now you will find a lot of cryptocurrency, a lot of trading in cryptocurrency, and the Government of India, even RBI, is thinking of introducing its own cryptocurrency. So now this RBI, that is, which was having a monopoly with respect to the issue of currency, now that monopoly will no longer be there. So what will be the future of cryptocurrency? What are the factors adopting to again the same question, adoption and perception, risk perception, attitude towards cryptocurrency. What are the factors that will lead to the adoption of cryptocurrency? All these things, behavioral issues, has to be studied by our students with respect to cryptocurrency. Then infrastructure and regulatory aspect. Well, so Okay, these things we have already discussed: security and privacy, cyber security, regulatory and technological issue. Then what will be the benefit of this entire exercise, FinTech? So the scam 1992 by Harshad Mehta, or in 1996 by Ketan Parikh, or after that also some other scams were there, before that also some scams were there. All these scams were made possible because there was no traceability of the transactions. Transactions could not be traced, and by the time it was traced, it becomes 3-4 months to identify there is loophole, and that loophole, then the things were ultimately, the entire paradigm and the dynamics used to be changed up by the time this entire thing was discovered. But using this FinTech, this traceability, the biggest benefit is the traceability. All the transactions can be traced electronically. That is the biggest benefit. Then counterfeiting currency. This is actually a biggest challenge to this counterfeiting currency is the digital payment. In the digital payment, because there is no scope for this using this counterfeit currency, so this will be the biggest benefit. Then in our India, here thousands and billions of transactions are unaccounted transactions, and since they are not accounted transactions, they are not considered while calculating the GDP of our country, NDP of our country, and since they are not recorded, so these transactions are also not taken a note of also for framing policy with respect to the country or economic policies. But now if all these transactions are, or most of the transactions are made digitally, so all those transactions will be recorded, which will be used for calculating the GDP of our country. So the tax revenue will also go up, counterfeiting currency will go down, and suitable policy, because we have more accurate data available with respect to the economy of our country. So the transactions will, because most of the transactions will be recorded. So, and since most of the transactions will be recorded, so the scope of creating black money or a parallel economy will also be minimized. So parallel economy or black economy is created because there happens to be unaccounted transactions. So that will also be another benefit. So other benefit: reduce cost, increase efficiency, build client relationship, facilitates regulatory compliance, will always be there. We are not going to discuss, already have been discussed, but there are certain issues and challenge. And biggest issue and challenge is, suppose in the year 2019, when this car protest was going on, we have witnessed that the government of Uttar Pradesh have put a ban on the internet. Internet was suspended for some times, and once the internet was suspended for some time, so I went to a petrol pump for getting my car filled up, and I have offered the credit card to him. He said he has refused because today is no internet, so credit card will not be acceptable, you have to pay in cash. Then I have to go to the railway station. I just opened my mobile and discovered that I cannot book Ola also because there is no internet. So that is one of the issue and challenge. And because of that, there will be total government control. You know that all my data will be linked, all my credit cards, debit cards, PAN card, everything is linked to my Aadhaar card. And suppose one day Narendra Modi or Amit Shah ji, he started disliking me, and then my Aadhaar data will be switched off, and it amounts to that Ranjit Singh has been switched off. And since Ranjit Singh has been switched off, I cannot make any transaction, I cannot book railway ticket, I cannot book air ticket, because my Aadhaar has been switched off. So the total government control will be there. So once the government control will be there, then there is an issue for the data privacy. How to deal with that? Again, the time will come. And digital currency for the criminal use, that is another issue. To what extent is digital? Because this legal currency, if it is used for giving money to the some people in Kashmir for throwing stone pelting, we can have some control over that. Like when this demonetization was declared, all those stone pelters, they become jobless because they are getting money for pelting stone and they were not getting. But this control will not be there on digital currency or Bitcoin if it is there used for that. And then capacity of some persons to use and understand FinTech, like old age people, always it will always be there, and we have to find some way out how to deal with that. Then future of financial innovation, the banks and the robots will be there. So robots and artificial intelligence will be actually driving the financial innovations in future. And then future of financial framework, functional frame of finance is the paying for goods and services, that will be using technology. Moving money from today to tomorrow, that is by saving, will be using technology. From tomorrow to today, using credit card, will be using technology. And managing risk will be there. Then we need some decision support system. We need sufficient robust infrastructure. And not only that infrastructure will be required, we need rules of the game, that will require laws, we require suitable contracts, we require regulations, so that all these things can be enforced and the binding. And this is all from my side. But there was one movie of Amitabh Bachchan and Akshay Kumar where the name of the movie was आंखें, और आंखें का जो है जब खत्म हो जाती है तो उसके बाद एक्चुअली असली स्टोरी स्टार्ट होती है. Those who have seen it, they will understand. Those who have not, just go and watch that movie. So beyond thank you, there are certain things like this was the future of financial innovation, but I see a little beyond that. And what is that? In the year 2004, we have seen this kind of advertisement. One bank is there and it's fully computerized branch. This was the tagline. And after that, we have started seeing this kind of advertisement from the year 2007, 8 or 9, that it is a CBS branch, fully CBS, core banking solution branch. Now what will be the future? We'll find robots in decision making. The person will not be there and only robots will be there. Robot will be the VP finance, robot will be the vice president marketing, robot will be the vice president HR, and all the decisions will be taken by robots. And then at that time we will require some human intervention, because we'll require emotions, because robot may not be having all those emotions. And at that time we'll have this kind of scenario that people are just living alone, be this girl or young boy or this oldest people, they are just staying alone because of nuclear family. We are having only one child. We have adopted we are adopting to the policy of one child policy, so that there is every probability that this girl is not having any other sibling, this boy is not having any other sibling, this person is also staying post retirement life alone because his daughter or boy, son, they have left for USA. And ultimately what we will require, then the tagline of these financial institutions, whether it is insurance company or bank, that they will start attracting people that come to us. You will find people to talk to, and then the bank with a human touch will be a reality maybe 20 years down the line. Thank you for your patient listening.
Thank you so much, Professor Ranjit Singh. It's wonderful session.